All right, people, here we go. Welcome back to Stacks at the Numbers. And I wanted to do just a quick overall broad look at Rigetti Computing Incorporated, symbol RGTI. And really only because I know everyone's talking about it and the whole sector has been raging. But we also looked at D-Wave and we looked at IonQ. And I know that people were asking about Rigetti also. So why not do a quick video looking over this stock as well? Now, granted, I know we have made some decent calls. I know we looked at Qubit, we looked at IonQ, we spoke about the potential. We said that we could continue to keep climbing. If you recall, we looked at IonQ. Well, initially, I think it was back at like 12 or something, maybe 10, 12. But more recently, it continued to pop. It got up to about 16. We were saying, yeah, let's just pull it up real quick together. And we were like right here at this trend line, coming up to this trend line, and it was at about 16, and I said, yeah, I still see value. We could see a nice big pop, and the stock continued to run up and got above 30 here, as you see, and in my opinion, that happened very quickly. And then we just kept going, had a slight retest, and now the stock just continues to keep going up here at 47.41, hitting new highs today. So even if you bought late when we did an update here at 16, you're up over 150%, which is just absolutely extreme. Now, I understand, again, that all of this is trending. Everyone wants to get in on the ground floor. So I can appreciate the fact that not only is there a lot of volume coming into these stocks, but of course you have the short squeeze taking place. And as we said, nobody just wants to miss out, right? So we're seeing the phases and the waves of what's trending over the last several years, right? A year or two ago, it was everything with AI, and a company could miss earnings by a mile, but if they mention they're going to start utilizing AI or just mention AI in general, boom, the stock would pop after hours, even though they just missed earnings. Then before that, it was like all the battery stocks, all the fuel cells and QuantumScapes, and then before that, it was all the EV stocks, right? PSNY, Lordstown Motors, which is no longer listed and went bankrupt. So you see how we have kind of like these popular sectors and places where massive money flows into it. And again, I can appreciate the fact that it did have a decent amount of the float shorted here on Rigetti. If we bring up, I'm just looking at FinViz real quick on the other monitor, bear with me. And if we bring this down, we can see we're still sitting with a short float right now. It's showing of about 17%, which is still pretty high. However, I feel like that probably should be lower now, especially after seeing another 26% jump today. So aside from the short squeeze and the fact that it was trending on Reddit and everyone's buying quantum stocks, let's get into the actual meat and potatoes of the company, of the business, and let's find out what's really going on. So in my opinion, of course, in the numbers specifically, all of these quantum stocks are now ridiculously overvalued. Again, even IonQ, we can pat myself on the back for making a decent call, but also at the same time, stock's now up to a $10 billion market cap, right? I believe, is that more than Sound? Sound, we know, absolutely exploded and squeezed up to about $24 a share. Look, SoundHound, $8 billion market cap. IonQ, which is operating at huge losses, right? If we bring up some of the numbers, look at this, $9.6 billion market cap, and look at these numbers here, even over the last couple of quarters. Now, I understand we jumped up from 7 figures to 8 figures now, and we're bringing in above 10 million, but again, look at the losses that the company's incurring, right? That's why we were kind of all in agreement that, yeah, quantum computing sounds awesome, could be good a couple of years down the road, but it's going to need some time. And the one thing that worries me is anyone who, of course, found out about this late, and now if we start to see markets pull back, then again, you're going to be left holding the bag. I mean, something like Rigetti, in my opinion, was trading down here in the 70-cent range, pretty much right near fair value, in my opinion. Then, you get it trending. I know other quantum stocks had some news. So again, I understand that we broke it up a little bit. We climbed it up. So even pulling back to where we initially had the break, $170, $2 a share, in my opinion, that would be justified. I would view that as quote unquote near fair value at least. Because you have to remember, even everyone who got pumped about AI and all these AI stocks, we know that we're kind of in the middle of this whole AI revolution, if you will, right? And even companies like SoundHound, we're still perfecting it, and we still have to continue to roll out our software, roll out our hardware. We have to start incorporating it across all these industries, right? So we're kind of in the middle, in my opinion, of this whole AI surge, meaning that 1 to 2 years from now, it will probably get even more efficient, it'll get, more perfected, and it'll be more influential on our society, on our business. But now, if you want to take the stance that, well, AI stocks were surging, and we think that quantum computing is going to be the next big place in the tech sector to really start to rock and roll, believe me, I can appreciate that mindset. My main concern, though, is that, it might take 2, 3 years potentially before quantum computing really starts to take off. And even if we look at some recent news here, I know Rigetti, recently had a little collaboration with Quantum Machines, I believe it was, and they were just speaking highly about the quantum computer that they kind of put together. And believe me, I can appreciate that. I'm not trying to bash it or make it seem like it's not as good as it is. However, they directly said as well that they need AI to continue on this upward and onward path in order to positively impact quantum computing, right? So they could kind of move hand in hand, but in my opinion, you're going to see, again, the growth and the surge in AI before you're going to see it in quantum computing. So again, if everyone wanted to pile in, we all got the quantum stocks trending, and obviously we exploded massively on something like this, going from 70 cents back to the all-time highs of 12 3/4, and then immediately rejecting hard. So, you kind of nailed the play already, and that's why realistically, all of these stocks really should be significantly lower. And again, my main concern is not saying that quantum computing can't be big. I'm sure people are going to comment, you don't know what you're talking about. This is going to be massive. Just watch. Believe me, I understand. As I said, whether I agree or disagree with a move, I hope everyone out there makes $1 million, right? But we have to be realistic sometimes. And something like Rigetti was probably the smallest company under the radar. Again, even after this massive surge, we're sitting at a market cap of about 2.3 billion. Looks like when we topped out at close to 13, we had a market cap of about 3 billion. And that could be viewed as not too expensive, but again, in the fundamentals, it's really just not adding up. And I know people always want to say, oh, you don't understand what this company does and blah, blah, blah. But as I said, if it was really picking up in value, we would have started to see it in the earnings and in the revenue, right? Now, granted, again, I'm not saying, a year or two from now, the company may really pick up its revenue. Let's look at what they did last year. So you can see again, look, company operating at a loss, right? See what I mean? The stock just went from 70 cents to over $12 and had a nice blessed bounce back today, back to $10 a share. And right here, look, this is the article that comes out right after the close. Is under $10 Rigetti stock the next 2025 Nvidia, and is it a buy? Well, with all due respect, you're very late here at this level. But also, more importantly, you see how the headlines come out, in my opinion, to continue to pump the stocks that almost don't deserve it. And yet on the flip side also, we see other companies, you see the inverse sometimes, right? We see companies that are fundamentally sound and they're growing nicely, and you see articles like, oh, this is, 3 reasons why I would never touch this stock in 2025, right? When in reality, the business seems strong, it seems stable, it continues to grow, yet we're seeing headlines with negative news. And then all of a sudden, the stock randomly pops because it's probably viewed as undervalued by Wall Street. And then that's when all these people jump the fence, flip the script, and then the articles come out. Oh, that stock just jumped 18% today. Is it a buy now? So that's what I mean. They're all Johnny-come-latelys, and this is why sometimes you got to sift through the BS. But in reality here, the real reality, we're talking about a company that's struggling to bring in $2 to $3 million a quarter. And right now they're losing, 15, 20 million every quarter to do so. So in the numbers, that's why personally, stock really should be back down here. And again, if you want to say, oh, the word is out, people are keeping an eye on it, all right, fine. Then it really should honestly come back down here. I was looking at it yesterday. My apologies for not putting up a video yesterday. Had a pipe break in the bathroom, had to handle that. But as we see, we could have had a potential pullback here to this trend line, which I was looking for. Looking like, I mean, if this happens Monday, we're looking at just below 6.5, looks like about 645. But also what we've seen with these trending stocks is we have these big run-ups and then we'll have like these big drop back downs, or the inverse as well. If we watch a stock dropping down, you'll see like a big spike up for it to retest the 20-day moving average. And then it, might reject and continue down. So that's why something like Rigetti, we have multiple levels to watch here. And these big breaks, in my opinion, would be completely justified. But first things first, on the technical side, this is the absolute bottom here. Looks like October 10th, right, when the climb began to take place. So I drew out the trend line, just going across, connecting the bottoms there, November 5th, coming up here to the 18th, the 19th, right? So this is where our uptrend started. So even though we gapped up, this right here is kind of our longer term support trend line. Now, again, it's not necessarily long term because all this started just 2 months ago, but you understand what I'm saying. Like, this is the more shorter term, and this is like the immediate short term support trend line. So that's why I just drew these out just to show you a couple of places the stock could go. Because technically, if we go back to when we got listed, you can see the stock climbed up to 1275 exactly and then dropped down. And even before we had this recent breakout, you can see the stock technically was in this long-term symmetrical triangle, meaning that it still needed time before it would approach the apex and then either get some good news or get some bad news and break up or down. So we had this premature breakout. We immediately retested up to 1275. And look, if I pull up just the 5-day chart here, you can see this was Tuesday the 17th, right? We're running up. We get to almost like $11. And then you can see, look, now this is Wednesday, right? The 18th. We immediately climb up to the 11s, boom, straight up to that mark of 1275 exactly. Look at the time at the bottom of the screen, 10 to 10. So we continued that rally, and within the first 20 minutes of the following day, we immediately took the stock up to our 1275 price, and then immediately rejected very, very hardly. And of course, we had the news about the Fed cutting rates, but they're maybe looking to do 2 cuts instead of 4 cuts as originally predicted. So boom, Dow dropped like 1,100 points on that news. In my opinion, long overdue. And I said this, I have been saying this for the last, 2 years maybe? If rates get increased, that is usually historically a negative. And every time Powell came out and said that we have to raise rates, which would now lead to further inflation, markets continue to pop up and climb and rage. Which is why I said that everyone's waiting for the rate cuts, but you pump the market when the rates were hiked. So now when the rates get cut, almost regardless of what they say, we're going to have to take the markets lower. Because we can't go up on a rate hike and go up on a rate cut. It just doesn't work that way. But again, we had the rate cut news and markets began to tank. And that's why I always say when you're dealing with a trending, high-flying stock that doesn't really make sense in the fundamentals, mixed with a market that is consistently raging, in my opinion, that is a recipe for disaster. Because if anything in this environment changes, you're screwed. And something like Rigetti, you could buy here at 9.5, and as we said, might be good 2-3 years down the road. But if this thing starts selling off with the rest of the markets, all of a sudden you wake up, the stock's back at 270, right? $1.80. You can't get upset. And it just really blows because you're the one left holding the bag at a ridiculous price. And now, as we said, you might have to hold on for 18 months, 24 months, wait for consistent positive news to come out, and then maybe finally it'll get back to your break-even price. So that's why something like this, very, very dangerous, in my opinion, right? We're not talking about something like a Palantir, right? Palantir, in my opinion, of course, massively overvalued in the numbers. But what's the difference between something like a Palantir and something like a Rigetti? Palantir is actually proving it in the numbers, right? They're consistently beefing up the guidance. They went net income positive sooner than expected. Analysts always look at the commercial segment revenue, but it always comes in above expectations, right? They're consistently beating earnings. Every analyst came out, oh, it's at 45, we think it's going to 60. Oh, it's at 58, we think it's going to 71, right? You constantly have that snowball effect of positive catalysts coming out. So with markets pumping, something with basically 99% positivity is probably going to pump along with it, which is why it's staying up, continuing to climb, and remaining strong. Rigetti, though, hasn't proven itself yet, which is why I'm saying here, in my opinion, we're probably going to see this pull back to about 6.5. Then you can see this flash crash back down here to retest the 20-day moving average. You can see also this candle right here topped out at 509, which would kind of be right around this trend line here from the gap up. You can see I drew it across the bottoms there after we gapped up. So you could see the very low fives. And then if we come back here, look, this is going from, which one is this? This is going from that original high to that next top out, looks like the beginning of March of 22. And that's cutting down across here. So you can see we have a lot of, intersections taking place. And I know some people said, wow, that's a lot of trend lines. I can't even follow that. I understand. But again, this is kind of like more for me. This is the way I do it to map it out. Of course, everyone does it differently. I can appreciate that. But this is why even a breakdown here to this trend line about 380, in my opinion, actually would make sense. And that would bring the market cap to, I believe, just slightly below 1 billion. And in my opinion, I always said that these companies here, like the up-and-comers in the state of infancy, or maybe a pharmaceutical company that's showing, some positive clinical data, but is waiting on FDA approval maybe, like, 5-6 months down the road. If we want to hold these companies at a valuation of 600 million, 900 million, 1.1 billion, it's kind of understandable, right? Because we have the potential for the $1 billion IP value on the back burner. So that's understandable. But here, something like Rigetti up at, 2 billion and change, in my opinion, that's a little overvalued. And that's why coming down here to about this trend line, which would be, about like 375, 383, that, in my opinion, would be, it would actually be healthy in general for the stock. But even quickly, if we look at the financials here, I mean, we have a company, first of all, the debt has slowly been coming down, right? It was here at 33.5 million. Now it's down to 22.5 million. So that's a very good sign. The cash, though, of course, is dropping because the company keeps bleeding every quarter, right? So as you see, the cash is 20 million. The debt is 22.5 million. So they kind of cancel each other out. Also, the free cash flow here now for last quarter, minus 17.7 mil. This time last year, minus 6.4 million. Right? So as the quarters are going along, we're incurring more and more and wider losses, but at the same time, the revenue really hasn't moved. And we actually did 5-6 million in change in a few quarters, and now we're sitting here between like 2 and the low 3 million revenue range. So that's why technically, if we look at the annual numbers of this stock, I mean, last year they did 12 million in revenue, cost them 75 million to do so, right? So in the reality, a company like that is not worth 2 billion in change. And I'm sure everyone's going to fight me tooth and nail in the comments, which is fine. I respect the conviction. I respect the confidence in the long-term potential. But again, we have to kind of call it like it is. I mean, we're also seeing the equity has dipped down, even though over the last 3 quarters, it looks like it bottomed out here at just sub 110 million and is slightly moving up now. We're back above 120 million. The assets did chunk down roughly 25% from above 200 million. It was holding the 160 million range, and now we're slightly below that, 157.25 million. But the liabilities also dipped down as well. You can see it was kind of holding 50 mil, and then we dropped to 40 and a quarter. Now, as of last quarter, 34.4. So at least these numbers are kind of moving in proportion, which is helping the equity, again, slowly tick up higher. But look at the book value, right? Book value is down 50% over the last 8 quarters here that we're seeing, and the book value is 64 cents a share. Before this got trending and started surging, where was the stock? Stock was sitting at about 70 cents a share. So the stock was fair valued. So that's why anytime you immediately break something up like that to $1.80, $2.50 a share, you're instantly overvalued. But again, Reddit, I assume, is pumping the crap out of all of these stocks, and that's helping everyone else make money. So, of course, if you were one of the first people on Wall Street Bets to post about this, or whenever these random people posted about it at sub $1, remember, again, I'm not trying to attack them, but chances are they positioned themselves, then they made the post for you, and then it's like a wildfire, right? It spreads from 1 of you to 8 of you to 30 of you to 1,000 of you. And then all of a sudden, everyone and their brother doesn't want to miss out. They want to pile in. And now the people who initially made the post at 70 cents now see the stock retesting the all-time high at $12.75. So again, I understand some people get defensive when they dive into a trending stock like this, but we do have to call it like it is. And again, the debt cancels out the cash. The equity's 123 mil. And for last year, we brought in 12 but lost 75, which would leave us with negative 63 million roughly. And if we subtract that from the equity, that puts the quote-unquote fair value of this business, in my opinion, at roughly $60 million in change. Market cap $2.25 billion, right? So this is what I mean. We have now escaped reality. And now you need this company to almost immediately pump out positive news. Otherwise, it's going to pull back, as I showed, to the trend lines of 6.5, and then the moving average roughly around 5, and then it could break to the next trend line of sub 4. It could even go back inside of this symmetrical triangle, right? Because it had the premature breakout. We've seen something like this happen before. We have an early breakout before the apex, and then all of a sudden we sell back down, and then boom, we're right back at the apex inside of the triangle, right? So that's why something like Rigetti can easily pull back to $1, even sub $1, because that's where it was before it started trending. But I do understand that, again, they release some news, so people are pumped, but even they say it may take some time. But let's just check some news real quick. Yeah, 640% in 2 months. Initiated a buy. Price target $12 a share. Okay. This was today. Back to Rigetti's quantum supremacy amid soaring market gains. Buy rating. Firm stressed how the power of quantum computing to address problems outside the capability of traditional computing would change the technology. Though the actual impact of quantum computing might not show up for years, investors at this moment find value in its disruptive power and application to major sectors. See what I mean? So everyone's basically saying, yes, it's going to be big, potentially like AI, maybe even bigger, but it's going to take time. Everyone was pumped about AI in 2020, 2021, right? Now you're seeing 2024. That's when the floodgates opened. So that's why, you guys want to get it trending now, the tail end of 24. And listen, I respect it. If AI was huge and now you think quantum's going to be the next big phase, so that's where all your money's going, you want to get in now. I can appreciate that. But if you're still several years away, if it slowly bleeds back down, back to where they were, and I'm talking all these stocks, not just Rigetti, I'm talking IonQ, Qubit, D-Wave Quantum, all of them. If they slowly bleed now back to where they started, you can't get upset at all. Because, as I mentioned, the only real reason for the big breakout is mainly on the heels of what's being kind of pushed out on social media right now. The experts noted that Rigetti's unique scaling advantages could help it to reach either parity or outperform rivals and acquire quantum supremacy in the upcoming years. Drawing analogies to artificial intelligence that became a runaway success in 2023, right? Everyone talked about it in 2020, 2021, started to come to fruition in 23. Took 2 to 3 years. Suggested that quantum computing could go in the same direction. Moreover, the company's capacity to tackle new difficulties and leverage a multi-billion-dollar market shows its transformational power, reflecting growing interest in the possibility of quantum computing 750% over the last 6 months. So as I say, whether I agree with it or not, if you got involved, you're up big, of course, I'm happy for you. Is it realistic, and should it have actually happened? No. In my opinion, no. There you go, 10K into almost 100K just over a couple of weeks. Shares are surging. Look, all of a sudden, right? And no one spoke about it when it was down here. Now it gets trending. Now, 8 people a day have to post articles about it. IBM stock missed a quantum computing rally. Again, IBM was a stock, I said, in my opinion, easily a $200 stock, sitting here holding the 220 level. And in my opinion, I still think long term, IBM will be a good grower, but that's just me. Quantum stocks are flying. The next revolution after AI. Quantum stock surge makes Nvidia look like Intel. I'd be embarrassed even publishing that headline. I mean, you're really going to go down that road? I mean, the sector's been raging for like 7 weeks. Come on. We're moving. We're moving. Give me more news. It's not letting me load up more news. There we go. Okay, we're reading. Quantum computing ETF. Yep, that's because everything in the fund exploded. I am looking for actual news, though. Disrupting weather program, creating a billion market. See, if you notice, there's not much news, which leads me to believe if we took out social media, stock trending areas like Reddit and StockTwits, then this company would be here. Okay, so here was actual news. Rigetti Quantum Machines automate quantum computer calibration. Shares rise pre-market. Okay, beautiful. Said Tuesday, successfully automated calibration quantum computer using AI. Right? So that's what I mean. This is coming more and more to fruition with the utilization of AI, which is still in the process of being perfected and rolled out. Right? So this is why I say again, people want to say, oh, you don't understand the growth, the hype behind. No, of course I understand. What I just want you to understand and keep in mind is the timeline, right? You always have to look at the timeline of what these companies are actually saying they're going to do and when it's going to happen, right? Not if they can do it, when are they going to do it? Calibrated process for a 9-qubit quantum computer by combining advanced hardware and software from Rigetti Quantum Machines and NVIDIA, according to a joint statement. All right. Well, again, that sounds good. Quantum milestones. What is this? Savvy partnerships. Rigetti stock jumping. Important benchmarks drawing investor confidence include the release of its 84-qubit Anka 3 system by year end. By year end, that's now. So, potential Christmas present coming from Rigetti. And a 100-plus qubit system in 2025. Strong development promise comes from partnerships with NVIDIA, Fermilab, and others, as well as possible DARPA contracts and more U.S. quantum funding. Right, let's use our tax dollars to pump some random penny stock so that we can try to make money on the stuff. I don't know, it's just, it's hilarious sometimes when you think about it. Notwithstanding the financial troubles, including expensive R&D expenses and liquidity issues, the story of scalable quantum developments and government assistance inspires hope. Yeah, so what? It's we're just hoping that it's going to be like a whole government-run, funded sector, and that's what's going to help pump the value here. It's a sad day in America, in my opinion. But I don't want to get off track. Recent successes in chip scaling and error correction increases Rigetti's edge in the cutthroat quantum field. These advances, along with the National Quantum Initiative's AX reauthorization, set Rigetti for more success. Analysts see double-digit price targets by 2025. Well, it hit it the other day, so now what? Right? Now whoever said that, guaranteed, they're probably not going to say anything for minimum the next 30 to 60 days because they have no idea what's going to take place. Double digits by 25. We hit it December 18th. So now that person probably is not going to speak for at least a month or two because they have no idea what's going on. So they have to wait and see if the stock pulls back, if it breaks higher, and then you'll get an update from them, whoever that was. I can almost guarantee that. We're reading. Again, yep, quantum machines. A successful application of AI to automate the calibration of a quantum computer. You know, with all due respect, it sounds like this is all about AI and not even quantum computing. But perhaps that's just the way I'm looking at it. But the work was completed as part of the AI for Quantum Calibration Challenge. Okay. So wait, these two companies teamed up in a challenge, but they're the only ones in the challenge? So it's not a challenge, really. It's a demonstration. Automated calibration, non-qubit Rigetti Novella, QPU integrated with quantum machines, advanced OPX 1000 control system, and NVIDIA DGX Quantum, a unified system for quantum classical computing that NVIDIA built with quantum machines. This achievement not only showcases the potential of AI in quantum computer calibration, but also highlights the growing maturity and collaboration within the quantum computing ecosystem. Okay. Quantum Elements use their software to achieve high accuracy in setting up individual and pairs of qubits, reaching 99.9% single qubit gate fidelity and 98.5% two qubit gate fidelity. Okay, so for the record, again, I do not claim to be a quantum computing expert, so I'm sure there are people out there who can comment down below and potentially give us a little bit more insight. Because I'm sure, again, people in the space are going to say, yeah, no, this is huge. This could, you know, we may turn around 18 months from now and the landscape may be unrecognizable. So that's why everyone's pumped about these stuff. And again, understandable, in my opinion. I'm not trying to bash, you know, the potential of quantum computing. I'm just saying, in my eyes, this happened a little bit too early. And that's why now everything may cool down for the next 12 months, 18 months, until, again, we get another big announcement or Trump says something, or you know, if Microsoft or NVIDIA buys out one of these quantum computing stocks, then all the other ones may pop because all of a sudden there's massive value in the sector, right? You understand? So it's kind of up in the air right now just because it went so high so quick. As the industry scales, grapples with increasingly complex calibration requirements. Okay, bottlenecks. Okay, today it can take weeks to months of expert time to develop the model to properly calibrate even a modest-sized quantum processor, and hours, sometimes days, that should be, to rerun those calibrations. Each qubit requires careful tuning of dozens of parameters, and these parameters drift over time and interact with each other in complex ways. As we move towards systems with thousands of qubits, the challenge becomes exponentially more difficult. The traditional approach of manual calibration by quantum physicists simply won't scale with our ambitions for larger quantum computers. So that's what I mean. It sounds like good news. At the same time, it sounds like they still need time, and they're addressing that. Demonstrate the remarkable potential of AI-powered calibration tools in quantum computing. That's what I mean. It sounds like, in my opinion, this is just further solidifying the power of AI as opposed to quantum computing. We're reading a successful demonstration shows how automation accelerates quantum computing. Well, of course it would, while maintaining the exacting standards required for quantum computation. Okay, we look forward to seeing these tools used by our customers who have both. Okay, AI is a critical tool for advancing quantum computing. This latest work shows how the scalable control of quantum hardware needed for useful applications hinges on advances in AI. This is what they said. This is not what I said. This achievement builds on the work with NVIDIA. Yes, yes, yes. Okay. Remove key bottlenecks. So yeah, that's why I'm saying, like, a year from now, you know, 2 years from now, if they keep, you know, obviously doing, doing these tests, and it's getting better and better, then yes, we will have more and more value on the horizon. Right now, though, it seems like we need more time. And that's why I say it kind of is unfortunate of how influential social media has become in the markets. Because this stock shouldn't have gone this high. And even if it did pop from 70 cents to $1.80, it still could have been viewed as overvalued, but at least not significantly overvalued. You know, now up here at $9, $10 a share, in my opinion, I really don't know if I'd take a shot here. But again, that's just me. People are saying, yeah, supposedly this was due out the end of the year. It's been sold to leading national labs. Huh? Uh-huh. There you go. Stock started climbing. Insiders started selling. Give me more news. There we go. We're reading. November 26th, direct offering. Yep, of course. I mean, you know, again, you broke the stock out prematurely, probably before it should have, and the stock explodes up. What was this? Stock explodes up to 337 here, and then all of a sudden, in phenomenal trending stock fashion, like they all do, they do a direct offering of more shares now at an overinflated price. So 50 million shares at $2 a share. They say it was at the market. It wasn't at the market. It was actually at a discount because the stock, again, recently popped up to 3, it looks like. Actually, no, maybe even if it was here, 180. I don't know. They said 2, and again, you can see the low on this day was 210, so it didn't even come down to the actual offer price, and then it bounced and started to climb right up again. So, I mean, usually we know when other companies do an offering, usually the stock price goes down. Okay, we're reading. Maintain buy at B. Riley. See, price target rate is 350 to 4. That's what I mean. They're following the trends, but even that upgrade is still, I mean, you know, at 60% lower than current stock price right now. Rigetti shares skyrocket on successful $100 million offering. Yeah, in my opinion, it shouldn't have. I've never heard of a company skyrocketing on a stock offering. It would use proceeds for working capital, of course. Said he believes the funds should support Rigetti's operations through the end of 2026, and that he expects to see increasing interest in the quantum computing sector as the technology improves. So that's what I mean. It sounds like they're not there yet. And it also sounds like they needed to offer these shares and raise these funds because they acknowledge that they're going to continue to probably have light revenue with a decent amount of cash burn going through for at least the next 12 to 24 months. And yes, this was the last news we read about, I think, with IonQ when we did an update speaking about Amazon Web Services. As it says, this little quantum embark program, and it aims to prepare businesses, customers for quantum computing, which can potentially revolutionize industries while solving problems that are beyond the ability of even the most powerful classical computers, AWS said on Friday. So again, I understand that, you know, again, Amazon mentions quantum, so the whole freaking sector climbs. I mean, you know, in my opinion, it really is just getting out of control with the way a lot of these stocks move. And, you know, again, you can come at me all you want in the comments section. I'll take it on the chin, no problem. But again, just remember, we looked at a lot of decently fundamentally sound stocks on this channel. So if you support this kind of move in appreciation this quickly, then I'd say, in my opinion, about 90% of the stocks we looked at on this channel are ready to jump 500 to 1,000% based on your logic. And again, remind you that something like IonQ now has a higher market cap than SoundHound after it broke up to $24 a share. But again, whatever. Short squeeze, you got it trending, everyone made some money. Now you guys, maybe most of you kind of see that it's going to calm down and quiet down, but, it was a heck of a run, so you're excited. Again, I can appreciate that. RSI, I mean, look at this, was well above 70 here for weeks the entire time, even though when I get a call wrong, traders try to bring up the RSI to me. So again, it only matters when it doesn't matter, right? Obviously, all fundamentals and technicals go out the window because apparently Reddit supersedes all of that. I don't know if it was Reddit, I don't know if it was StockTwits or something else, but again, I know that, basically it seems like all of these massive explosions started on Reddit, so I just keep mentioning them. But again, hey, I mean, to the people who run to the people who run it, I mean, you have the tightness in the Bollinger Bands, you position yourself in a stock at 70 cents and change, and you got everyone to squeeze it up to almost 13 for you. So again, that's what I mean. The people running the show are really making out like bandits, and I just hope no one else gets hurt too much here buying near these highs potentially. But RSI, again, just yesterday, dipped down to about 60, instantly bounces back today, 25% move, back up to 66. But we can see that we've tested down during the run-up. Look, even on the way up, it came down to the middle of the road and then popped up above the benchmark. Came back down to about 50, middle of the road, then we popped. Down to about 50, then we exploded. So that's why now we may be stepping back down to 50 before running back up, which is why I'm saying some of those trend lines, 670, low fives, in my opinion, that may be the next stop for the stock. MACD obviously just beeline to the moon. Now we had a little bit of a drop. So even if we come back down and touch, we don't necessarily have to cross to the downside, but we may just sell off and touch and then bounce, which is why, to say that something like this could drop back to 5 or 370. I mean, really not too crazy. And again, look, it's all about the RSI, right? RSI on the weekly, 95 and a quarter. But it's all about technicals. But as we see, we are massively out of the top Bollinger Band now, which is sitting at 659 on the weekly, 95 RSI, MACD straight up to the moon. And there you go. The power of social media. We'll check the pivot points real quick. And we can see, look, even on the weekly, we are just nowhere near our pivot points. This last one looks like about 8. But again, none of these technicals matter, apparently, because the stock is trending. Top line resistance here on the daily, 480, right? So I was looking for a pullback to around the low 5s, potentially a break to about 380 we were looking. And you can see we have pivot point at 480, pivot point at 393. Even the moving average coming up here, still sub $3. That's why, in my eyes, that's really where the stock should go. But we're witnessing the power of Reddit. And also, if we look at what the company itself is actually forecasting for us over the years, look at this. By 2027, we may only be bringing in $55 million for the year. For the year. So if the company right now brought in $55 million, it's overvalued. Think about that. $55 million for the year, $2.25 billion market cap. Okay. And also, because we're operating at such losses, even off of this 55 million jump here, this 400% climb in revenue over the next couple of years, projected supposedly, you can see that we'd still be losing 14 cents a share. So that's why, again, I think that, could they be good? Yes, of course. Should it have happened this quick? And again, in my opinion, would I buy something like that? In my opinion, no. And again, some people, they like to talk some smack in the comments. And listen, I welcome it sometimes. Sometimes I like to have some fun. I like to have a little back and forth with you guys, But also at the end of the day, if this pops back up to 1275 and you comment like, oh, you said you didn't like it at 9, now it's at 12. How's that feel? How you doing? It's like, yeah, okay, fine. But again, you probably will only see that move because it's trending online. Before it got trending, it was worth 70 cents. Just remember that. But also, more importantly, like, me being wrong, like that's not a gotcha for me. Right? Just recently after we hit the milestone of 5,600 subs, I posted a couple of the great calls that we've made on this channel over the last couple of years. And that's why I am significantly more correct than I am incorrect. So if you think getting some random trending, fundamentally trash stock like this wrong, if you think that upsets me, you don't know me very well. Because in the end, the calls on, the IBM growers, saying in my opinion, you should position yourself in something like a PayPal when they beat it up and now it's storming back, right? Those are the calls that I like to make. SB, again, originally brought on this channel at 3.25. Stock hung out, went down to 2.5. Then all of a sudden starts climbing up. Next thing you know, it's at $5 and change. It's at $6 and change. Rolls Royce, $1.20 to $7.50. Right? That's what I mean. So these moves, again, not to be a cocky schmuck about it, but with all due respect, these moves, you guys need to wait for Reddit and social media to say something, and you need everyone else to pile into your stock to help you get it moving. When I analyze a stock by looking at the numbers, that's why I like to look at the numbers, you're cutting out a lot of the BS, you're cutting out a lot of the noise, and when you see growth, it more than likely will inevitably happen. Again, something like Honest, right? We looked at it at $2.50. We looked at it at $3.50. Stock hit what, $8 or something like that? That's what I mean. I did that all on my own. Whether it was trending on Reddit or not, I knew, in my opinion, it was going to be a winner. SoundHound, now trending. We looked at it between $1.60 and like $3 and change. Every time I looked at it, I said, in my opinion, I would be accumulating shares and building a position. Today, the stock's at 24, right? Now, because it's trending. Before, even, again, we didn't need it. We didn't need everyone to get it trending for us. We knew it was going to be a winner. That's the difference. So, again, I know I always go off on these tangents, but in general, in my opinion, listen, if you got in late here, of course, I hope it keeps going. I hope everyone makes money. In reality, stock should pull back to, stock should pull back to $1 realistically, but we know the power of social media. That's probably not going to happen, but I'll end it there. I already spoke too much. I wanted to be quick, and it's probably a 30-minute video or whatever, but I'll end it there. So once again, Stocks by the Numbers, I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel, and of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good weekend.